When newcomers ask how to spot a crypto scam, I usually point them to the usual suspects: shady teams, missing audits, anonymous founders, and wild price swings. But here's the twist that no one talks about. Bitcoin and Ethereum had every single one of those red flags in the beginning. Think about that. The two most trusted crypto assets today, the very bedrock of this entire ecosystem, were once accused of being scams, Ponzi schemes, and hacker tools. And frankly, those early concerns weren't completely irrational. Bitcoin's anonymous creator, that set off alarms. Ethereum's pre-mine and teenaged founder, that felt risky too. They were volatile, unregulated, associated with crime, lacking adoption. Now, if those were new tokens launching today, most people would be shouting rug pull. So why did these projects survive where so many others have failed? That's what I want to walk you through in this video today. We're going to look at the red flags Bitcoin and Ethereum carried at launch and how they didn't just overcome them, they transformed them into strengths. When it comes to crypto, not all red flags mean scam. Sometimes they just mean innovation is outpacing understanding. So let's start with Bitcoin. Launched in 2009 by someone using the name Satoshi Nakamoto, who to this day has never revealed their identity, Bitcoin immediately tripped a red flag that would be a deal breaker in most modern investments: an anonymous founder. Think about it. If a project launched today with no known team, no LinkedIn profiles, and no accountability, we'd instantly call it shady. And back then, well, yeah, people did. It was written off as a scam or a toy for hackers. And to be honest, early users were using it for sketchy things. The dark web marketplace, the Silk Road, that's where Bitcoin first saw real usage. And that only added fuel to the skepticism, even though it further proved its use case. But there was also the volatility, from fractions of a penny to $10 and back down again. There was no regulation, no insurance on early exchanges, and some of those exchanges, like Mt. Gox, for example, literally lost millions in customer funds. It was the Wild West. And despite all of that, Bitcoin didn't die. Why? Because the fundamentals were real. No matter what the headline said, Bitcoin kept doing what it was designed to do: borderless, permissionless, censorship-resistant, peer-to-peer value transfer. It didn't need a marketing department or an investor pitch deck. It just needed time and community. Developers kept improving it. Miners secured it. Users spread it. And over time, the narrative shifted from criminal money to digital gold. The volatility was still there, but it became a feature, not a bug. And the lack of regulation, that became part of the appeal. And the anonymity, it now feels like a philosophical choice, not a red flag. By 2025, Bitcoin has not only survived, it has thrived with a $1 trillion market cap and spot ETFs embraced by Wall Street. But don't forget, in its early days, Bitcoin looked like a scam to almost everyone. And that's exactly why this context matters, because now we'll look at Ethereum, which raised even more eyebrows when it launched. When Ethereum launched in 2015, it looked even riskier to many than Bitcoin did. Instead of being mined into existence like Bitcoin, Ethereum started with a pre-sale. That meant people sent Bitcoin to an address and got Ethereum in return, a model that today resembles some of the riskiest pre-sale scams. And then there was the founder, Vitalik Buterin, a brilliant teenage coder with no formal company, no corporate backing, and no real-world experience. A lot of people looked at Ethereum and thought, this is way too centralized. What's to stop the team from just dumping their ETH and walking away? And it certainly didn't help that just a year later, after its launch, the project suffered a massive hack, the infamous DAO attack in 2016. Over $150 million in Ethereum was stolen because of a vulnerability in a smart contract. not the Ethereum network itself. But it was still a huge blow to confidence. The solution was, well, a community-led hard fork that reversed the theft, but it split Ethereum into two chains, and that created even more controversy about governance and decentralization. Then came the scalability issues. Gas fees exploded, the network became congested, and critics said Ethereum would never be able to support real applications, let alone mainstream adoption. So what happened? Ethereum didn't run, it rebuilt. The project leaned into its open source roots, brought in a massive developer community, and kept shipping. Security audits got tighter. The transition to proof of stake in 2022 slashed energy consumption by over 99%. Layer 2 solutions like Arbitrum and Optimism started handling the scaling load, and Ethereum became the foundation for DeFi, NFTs, DAOs, you name it. Institutions took notice, ETFs followed, and what once looked like an overhyped experiment became the infrastructure layer of Web3. Like Bitcoin, Ethereum started out with red flags, some that would disqualify it by today's standards. But it overcame those challenges again through transparency, decentralization, and relentless iteration. So the next time someone tells you a project is risky because it has volatility or an anonymous founder, or it just sounds weird, remember, that's how both of the biggest names in crypto started. The difference is they kept building. So here's the bottom line. In crypto, red flags are real. Exit scams, rug pulls, abandoned projects, they happen all the time. And it's smart to approach new tokens with a healthy dose of skepticism. But here's the nuance most people miss. The same warning signs that point to scams today, anonymous founders, volatility, unconventional funding, they were all there in Bitcoin and Ethereum too. What separates them from failed projects isn't a lack of risk. It's how they responded to those risks. Bitcoin didn't collapse when Satoshi disappeared. It grew stronger. Ethereum didn't die after the DAO hack. It adapted and laid the foundation for an entirely new financial system. So when you're evaluating an altcoin or any crypto project, just don't ask, is this risky? Ask, is this building through the risk? Is the community showing up every day? Are the developers improving the protocol? Is the project adapting, evolving, responding to real challenges with real solutions? That's how you spot something real in a sea of speculation. And if you're ever in doubt, stick to the fundamentals. Bitcoin and Ethereum didn't get here by accident. They earned their place by surviving everything that tried to destroy them. If you're looking for help separating signal from noise, come check out our tools and research at learningcrypto.com. Thanks for watching, and as always, stay sharp and stay sovereign. I'll see you in the next one.